Hello, everybody. Things have gone pretty much as expected from last week with these intermarket relationships moving to their respective areas of support and resistance. What hasn't happened is that the market hasn't acted more negatively toward it. And so maybe this week we're coming to a point where, well, I don't know whether what has to happen here is either this is going to start to move up above this resistance level, or since it's at this resistance, it's going to back off and come back down. I don't know that it'll come back down here. But one way or another, just going sideways or chopping around here, these markets, and you'll see in all the different ETF sectors that we look at, they're just marking time. It's like the S&Ps here. They're just forming this little trading range, and Friday held up at that pivot low. So if you remember, there was this really nice upward move that occurred on Wednesday. So at the beginning of the week, prices moved up. They come up into resistance. They stall there. You can see the small candle body there. And then they gap down on Wednesday, close at the high. It's like, okay, here we go. Off to the races. Take out the high and go. And we always wait. It's got to take out the high. And then the next day, it gaps down under the low. It's like, okay, here we go. Down to the pivot low, maybe down to 4,000. And you can't see it here, but markets rallied up from there. They were at the high of the day. We are building our interest list of stocks that are looking good. Lo and behold, I guess it was about an hour before the market closed, and prices were up into, and I can put this on a 5 or 15 minute chart. Don't pay attention to the internals. And this was like the break between the days. But this is what happened. It was up there at resistance, but hanging near the high of the day. Like it's going to close there, maybe push higher. And then it just started to creep lower, and it just continued and continued and continued. Auto. I don't know why it's putting that on there. Oh, because these are updated, I guess, the black lines. Anyway, all the way back down to the low of the day, and then it wound up closing now. So, of course, we're thinking it's going to go down. It did go down. It gapped lower, tested the pivot, looked to the left, and it held there on Friday. So now we've got this retest of this pivot line. It's got more resistance overhead. If it breaks Friday's low, it should come down here toward that 4,000. And what we'd be looking for to see are interest rates moving up. We talked for weeks about this holding this level. It did. Now it's at resistance. I spoke about that last week. That it's kind of caught between these reference points that are relatively close together. And you can see SPX down here on a bar chart. It's just been marking time after getting up there where interest rates started moving up. And this one sideways. So it's showing relative strength to a negative occurrence. And now this is at this resistance. If this begins to move down, this should break higher. So we're waiting. Short-term interest rates continue to march higher. Yield curves still saying recession is coming. You start hearing more of those that were thinking soft landing, no recession, thinking, well, maybe there's going to be some kind of recession. Well, that's what the bond market is saying. Sentiment is still out of these upper bands where it was bearish up here, and as things have been correcting, more toward a neutral level. Breadth is down into a bullish level. If this pops down, it certainly can go lower. You can see where it was down here. That's that minus 200 area. And just based on the way this is trading, I think that would be the extent to where it goes. And one of these larger down moves, we could scroll back. You could see it can get down to 300 or so, but we don't have that right now. What we'd like to see, ideally, sure, bring this down into this area, bring sentiment down here, these to be aligned. Even if interest rates go up, they start rolling over, and that's where we could have some kind of a decent rally. Otherwise, we're just going to continue to pop back and forth, back and forth. How long that'll happen, we'll see. The dollar coming up into resistance, it backed off. Right away, gold flipped up on Friday when that happened. But, while this backed off one day, that doesn't mean it can't go up further into this resistance area, whether that keeps going up. So that's what we're looking for. It is interest rates and the dollar. Do they go up and markets come down, or do this dollar come down and interest rates come down and the market push up toward the top of the trading range? Back and forth day to day, AD line, as it goes up, it does okay, and it goes down, it's not all that extreme, so kind of neutral everywhere. Oil began to roll over. We talked about the trading range a few weeks ago. Couldn't get to the top of it. Kind of get like this head and shoulders top now. Gap down on Friday. There was some buyers there. And we'll see where that goes. And I got these on weekly charts, compressing the data because everything's going sideways over the last few weeks. And so looking at all of these kind of like from a longer term perspective, we've got bottoming patterns everywhere. Things, S&P marking time, Q's marking time, transport's the same thing, Russell the same thing, semiconductors, software, technology. Now, industrials actually look like they could break higher. Well, it's not like they're going to break higher and go significantly higher. It doesn't look that way. Well, there's a lot within this particular ETF are some of these defensive stocks, and those are the ones that look like they're going to go up. So this might go up a bit, but those defensive stocks, especially if the market starts to roll over, are going to be the outperformers. And we're mentioning a few of those in the letter. But software, bottoming out, marking time, semiconductors, what do you got down here? Internet, same story. I mean, there's tons of room to go up because of the corrections that occurred last year. But the short-term correction that's going on after the move up in January continues. Communications, same story. Consumer discretionary, same story. Materials. And you see this little drawing I've got on here? It's because, going back to the daily chart, you've got this head and shoulders top. So this is one that you want to put an alert on and see if it breaks below these lows or whether it holds here and starts pushing back up again. So this would be bearish, one of the underpinnings of the market, the bullish market from January, maybe beginning to fall apart. And if it pushes up into the top of the range, well, that would be a positive event. Now, there's lots of things to keep an eye on. Well, we're not doing much of anything. I don't know about how that sounds, but it is what it is. Aerospace and defense is kind of grinding its way higher, and it looks like it could continue to move up. One of the better looking things, at least it's not going sideways, not moving much, but not moving sideways like everything else is. Retailing, same pattern. Consumer staples. This has been holding up, and it looked like it would drop like a 1, 2, 3, 1, 2, 3, 4. Right, the topping tail bar taking out the inside bar's high. It breaks the low and pops right back up again. So look at the daily chart on Friday. Wide range bar. One of the big wide range bars that occurred on Friday. So this is bottoming out. And this is kind of lined up, whereas this is going to go up. Institutions are putting money in here because they're concerned that all of these are going to roll back down again. We don't know how far they'll roll back down, but if they take out these pivots, we know some downside action is coming. And in the S&Ps, here we're looking at the spiders, 400, maybe a little bit below that. You see that bar right there. It's not a pivot, but it is going to be a support area intraday. You see there's only 2 bars to the left and a whole bunch to the right. That'll be a significant level right there. And I can tell you exactly what the level is just by putting the price on it. It's not an exact thing, but just give or take, around that area down there. All right. Utilities, defensive, that popped up on Friday, and it had a chance to go up. Well, interest rates were going down, and it didn't. So, but a little defensive thing there. And just looking at others, it's the same story. Financials going sideways. Insurance, a bit better, kind of grinding its way up. Broker dealers, a little bit of a grind up. Banks, sideways. You can see the bottoming action going sideways at resistance. Home builders, sideways. Construction, sideways. And these did great while interest rates came down. Now, they held up relatively well, just like the broader markets did, as interest rates moved back up. And so now with interest rates at resistance, which we looked at, are they going to get through it, or are they going to back off? If they back off, the assumption is these go higher. We need to see broker dealers, moving up. And here's the interest rates. I put that here so you can see the inverse relationship and what we're looking at as to whether this is a bullish pattern. And it's in an uptrend. Major support was down here. And so it pulled back, toward this area, kind of what we call, not kind of, well, I'm saying kind of because not exactly, kind of leaned on it, what we call minor support. And it built this little W there, and now it's starting to move back up again. And this pattern suggests it can get through that pivot high. And if it does, all of these going nowhere scenarios are going to come down. And then we'll have to measure how far they come down. Right? All right. Biotech, sideways, healthcare equipment, same story. It's kind of boring, but hey, it'll change. This biotech looked like it was going up. It pulled back, and it's just a trading range going on here, so we'll keep an eye on that. Healthcare is defensive. I talked about this last week. Could it make the turn? It's at support. And you see the small candle bodies. The downside momentum is slowing tremendously. It just needs to, and this got above a prior week's high here. It flipped back down, and so maybe another week, but this has the look of a pattern that's going to turn up. Medical devices, that same sideways price action. Pharmaceuticals, same thing. Got an alert up there, see if it can move up. Healthcare providers, maybe. It's still just a big trading range, but you got a pivot low. You got a retest, reversal scenario here. You've got a high. Can it take it out? Lithium. I got it on this page, but this is something the ETF letter is short. And you can see gap down on Friday, and it looks like it can go lower. It looks pretty good. Others. Crude oil. Marking time. We looked at the daily chart, the other slide. Came down, but overall, it's just in a trading range. Oil services. Going sideways. Gasoline, going sideways. Gold corrected as the dollar moved up. This came down. So did the miners. So did silver. That's the inverse relationship. Bitcoin survived the abyss of rolling over here, going down to 10,000 or so. Now it's at resistance. We'll see what it can do. Steel going sideways. Copper going sideways. And another oil ETF. That one looks like the worst. You can see the head and shoulders topping, and it's kind of flattish, roundish shoulder as to whether it's going to break here. Jets. So theoretically, the inverse relationship, if this was to break lower oil prices, if this breaks down, right, this should flip up. And which way is it going to go? It's in a trading range. If it takes this out, more inflation concerns, jets goes down, interest rates go up, oil goes up, everything else goes down. Everything's on hold and waiting. So I threw a few other ETFs in here for us to look at to see maybe we find something else of interest. Cybersecurity, bottoming but going sideways. Sky Cloud, bottoming and going sideways. Now this one is doing great. So Europe hedged by the dollar, and this has been doing quite well, and that's coming up to resistance. Paving, construction, that did well, going sideways, and iBuy, online retailing, same story. Telecom, same story. Cruise, same story. Blockchains, bottoming out here. Robotics, should form a buy setup, but over the last few weeks, just kind of chopping here. ARC funds, they know they've been decimated, right, over the last year and a half, bottoming out. A few weeks going sideways. Innovation sideways. Technology, robotics going sideways, right? And revolution, maybe a little weaker there, but not doing much of anything. So there you have it. We're waiting to see these intermarket relationships and internals, whether they can line up, get things moving one way or another. And my preference would be interest rates go up. The Fed will get even more aggressive in their tone, which they did last week, with a few of them saying that, hey, what are we waiting for? Let's do a half a point. Let's not do the quarter thing. We're gonna beat this inflation. We're gonna have to do more to get it down to 2%. All of that is true. It's good that they're saying it. The markets are ignoring it. And so if we were to get that 10-year popping up and the dollar popping up, yeah, the Fed would probably come out and do half a point. The markets would have maybe a little bit of a crater action going down to retest some lower areas where buyers are going to step up again. And I think that is where January had a nice move, but I think that, hey, just using this chart here as a representation of what we see pretty much everywhere, if this was to come down somewhere in between here and begin to make the turn and everything lined up, these charts would be taking out these pivot highs. And I think it could be a scenario of kind of shooting fish in a barrel. You see how all of these things are moving in similar directions and similar type of corrective price action. When I say shooting fish in a barrel, I mean basically everything that looks similar like this are going to start moving up. And some things will be more than others, but look, so many things are moving together. Let's go back to the weekly charts there. See that bottoming kind of action. So we'll see how it plays out. Right now, it's a waiting game. We have to keep doing the work to monitor what's happening here. And at some point, it is all going to come together. So, as always, if you have questions, email myself, Greg at Master Trader, or Dan at Master Trader.